but just want to focus on the UK economy right now because high unemployment, accelerating inflation and a shrinking economy. Policymakers in the UK have a great deal on their plate right now. So what is the main concern for Bank of England Governor Mervyn King? Well, Societe Generale's chief economist, Brian Hilliard, is clear on the inflation threat. Last month, he warned that the central bank will lose credibility if it does not increase rates this year and increase them by the most since it gained independence in 1997. I'm pleased to say that Mr. Hilliard is in the studio with me now to explain a little bit more about those comments. Do you stick by that?
Oh, I do indeed. The problem is that the inflation rate is running away from the Bank of England's own predictions, and it makes one fearful that they are going to revise them up yet again. And we need to reassure the markets that the Bank of England has the situation under control.
So the risks of raising interest rates, how would that affect the UK consumer? Is that not something to consider as well?
Indeed, but the consumer's been getting a lot of benefit from very low interest rates on mortgages. That can't last forever, and there are other parts of the economy we need to consider, and producers are starting to put up prices.
But doesn't that mean that the UK consumer is going to be more squeezed because of the VAT rise, the sales tax rise, things becoming more expensive, the price of oil is rising, add to the mix a raise in interest rates, and could that have a negative impact on the economy, on consumer spending?
It will in the short term, but on the other side of the coin, net exports should start to grow. The manufacturing sector is absolutely on fire, and we should see an export increase during the course of this year, which will offset some of that hit to the consumer. Despite
the fact that we're seeing problems abroad in the Eurozone, one of the UK's main trading partners, the exports will still be buoyant enough to offset any domestic losses.
The export orders are very, very strong. That's coming through from all the business surveys, so we should look outside Europe as well.
So, Brian, if we were to change interest rates now, today, would it have an immediate effect on inflation?
No, it wouldn't. It's going to take maybe a year or even longer. But what we need to remember is that the current level of interest rates is an emergency setting, an all-time low, and we need to wean the markets off that. And even if we get up to my forecast of 1.5% by the end of the year, that will still be an extremely loose monetary policy, which will still deliver a stimulus to the UK economy.
1.5% you're expecting by the end of the year. When will we see the first rate hike?
My forecast at the moment is a 50 basis point increase in August. Clearly, after the recent Bank of England comments, it could be a little bit earlier. We'll get some clarification on that in the inflation report later this morning.
Yeah, what are you expecting from that?
Well, I think the markets are getting a little ahead of themselves. The letter that the Bank of England governor sent yesterday was talking about the split on the committee. I think that's evident of the dynamics in the committee moving very rapidly, so they are moving towards that rate increase. But the other comment people focused on was the balance of risks of inflation being above or below target in 2 or 3 years' time. Now, that's a standard comment, and it's almost identical to the comment that was made in the November inflation report. And at that time, the committee was still forecasting inflation to fall below 2%. I think the markets are misunderstanding that comment.
So what does that mean?
It means that the markets are right to be looking for rate increases fairly soon, but they're getting a little bit too excited by the importance of that particular sentence.
Okay. How much of a risk are inflation expectations right now? We're already at 4%, accelerating, double the government's target. How is this going to impact on inflation expectations, wages? Is it going to become this self-fulfilling prophecy?
I don't think wages are the issue. The point is that companies can raise prices even if wages are under control, and that's been the story of the last 10 years. The issue is inflation expectations in the medium term. The Bank of England rightly draws a distinction between short-term expectations, which will rise and fall with reported inflation, but medium-term expectations depend on the credibility of the inflation target, and those expectations are rising towards 4%, nearly twice the target.
Yeah, well, I know that you'll be watching Governor Mervyn King's speech very closely. Brian Hilliard, chief economist for Societe Generale on the UK, thank you very much.